Hello, welcome back. Today we're going to talk about closing costs versus down payment. Welcome back, everybody. Today I wanted to talk about a common misunderstanding. What are closing costs for a buyer, and this is all for a buyer, versus a down payment because the seller doesn't pay a down payment. And the down payment is between you and your bank. It's toward your loan, and it gives you a certain amount of equity in your home, in your new home, right off the bat. So if you're paying 3.5% down, it's not a ton of equity, but it's a portion of the equity into your home. And it's kind of like you're starting to dig roots into the place. The banker likes that because you're taking ownership of it. 20% down gives you a reasonable amount of equity, such that if the market changes and it dips, you probably will still be in a position to owe less than the home is worth. So if you had to sell, you wouldn't lose money, the bank wouldn't be out money, everyone would kind of come out in reasonable fashion, although you could say that you lost some of your down payment. But you should definitely plan to, if you're buying, you should definitely plan to live for at least 7 to 10 years, or if you're timing the market or something, good luck with that. Okay. Closing costs usually run about 2 to 5% of purchase price. I'm going to use 3% for shorthand, and they include such things as these. Now, I would obviously know a lot of these, but I'm going to read a list just so you can get a sense of what can be involved in the buyer's closing costs. Application fee, appraisal, attorney fee, closing fee, courier fee, credit report, escrow deposit, FHA upfront, mortgage insurance payment, premium, flood determination, home inspection. Home inspection is usually paid, same with the appraisal, out of pocket at the time the service is rendered or near about. Homeowners Association transfer fees, homeowners insurance, lender's policy, lead-based paint inspection, loan discount points, owner's policy, title insurance, okay, so you're getting the idea. There's a bunch of these. They don't all apply every time, but those are expenses related to the transaction itself. It has nothing to do with your loan insofar as you're going to end up paying it back, except for the premium on the mortgage thing, the mortgage insurance. But what I'm trying to say is it doesn't reduce your principal balance or anything like that. The down payment does that, and the closing costs simply get the transaction completed. The key that I wanted to bring up then is that sometimes my clients will want the seller to pay closing costs. And this can be negotiated. It's never a given, but you can negotiate for it. And if you get it, no part of that concession, no part of that credit from the seller can pay the down payment. That's got to come from you, from your family as a gift, but it's got to be supplied by the buyer side. However, the seller can cover some or all of your closing costs, and that can be negotiated. So you might negotiate for like 3% of whatever the purchase price is. Usually a fairly safe bet. If you have any questions about this, give me a call, 815-931-2279, or email me edward.pluchar@gmail.com. Thanks.